We are here on the Tuesday again. Uh, it's the first. Wait, it's the first week of the holiday season. It's the first week of December. So I believe it's a good time to discuss how usually the market reacts during this season. So unlike most months, unlike the 11 months in a year where we are able to trade unlimited or as much as we want, December is a special season where a lot of the traders are taking their time offs. A lot of the central banks and the governments are taking their time offs. So market liquidity isn't as high as the usual months. So given that, I'll be sharing some of the few things that I do, and some of the few things that some of my fellow colleagues do, and some of the few things that traders all over the world do with regards to scheduling or planning their holiday season. Or this could also apply for seasons where volume is not there for the market. So you can use the information and the tips that we'll be discussing right now for other seasons as well, not just for the holiday season. But before we move forward, let's wait for a few more guests to join us. Let's start in about 3-4 minutes. Let's give some of the other people some time to catch up with us. And before then, I hope everyone's having a good time. And some of you guys were able to make a couple of good trades from last week. The USD JPY had a huge movement last week. So for those who are early, let's check. Let's show you guys what's up. So see, remember when we were setting up our support and resistances, it basically broke down altogether the last time that we used this. Let's just remove it since we are not on that level anymore. And let's show you guys. All right, let's show you guys. Let's show you guys specifics of what went down last Friday. This one. So I'm setting up some vertical lines for you guys so that you would see what time, the timing of the schedule, the breaks of every day looks like, and what happens in each day. Hope everyone was able to take advantage of this one. And we will be checking out also as well the fundamentals. So as you can see, we're tying everything that we've been discussing together. And from this moment onwards, I will be discussing less and less about the details, what I'm doing. And I'm expecting everyone to have seen all of the previous videos, whether from my videos or from my colleagues' videos with regards to trading here in Trading Star. But this is what happened. This is an hourly chart for the USD JPY, and this is the movement last Friday. movement. Yes, so there was a huge movement for the Friday for the USD JPY from 148.0.3, and it dropped down to, by the end of the day, it dropped to 146.2. So that's roughly around 2,000 pips of movement. I hope some of you guys were able to take advantage of that. I hope some of you guys were able to make money off of that and the like. So again, those were opportunities in the market. And as always, since we'll be discussing, since it's a Tuesday again, we can discuss, let's see what happened last Friday. So let's see what happened last Friday so that we would know why the movement went the way it did. Okay, so this is, for example, how you check the, let's say you want to back test or you want to double check some of the things that would happen. Let's say, why did the USD JPY move this much? So it started around 1 p.m. on last Friday, 1 p.m. on that time. So let's check what happened, what information we got for the dollar. So let's just remove this, put filters. Let's remove everything except for the USD. All right. So as you can see, no major movements for the dollar. There was improvement in ISM prices, which was from 46 to 49. But the major movement major impact is the PMI for the manufacturing industry, which coincided with the previous of 46.7. I know it's still the 46.7. It's written here. But because the forecast was 47.9, the expectation was to have a huge improvement for the dollar, but the actual showed of 46.7, which was, I understand that it's the same as the previous month and no improvement or no decrease altogether, but because it was lower than the expectation, the market saw this as a means to sell the dollar. And there's also a negative information with regards to towards total vehicle sales, which in totality I do not believe it's a bigger impact compared to this one. And you also have to consider that for the longest time the dollar has been moving upward, or the USD JPY has been moving upward for the dollar, for the currency pair. Let me show you guys. This is let's put it on a daily chart. So let's remove some of the information here, because we will not be needing this for now. Right. So as you can see from the daily chart, so there's been a lot of movement for the USD JPY, and it's been moving that way for the longest time. and it started around June, wherein the lowest point during that time was around, I apologize, that was around March, where the lowest point was around 130.5, and it kept rising and well, there's a huge return here during July session, wherein it went back to 130 to the 138 level. But ever since July, the USD, the dollar has been strong, and it's only during this last month that the currency pair of the USD JPY shifting towards a selling position. So moving towards a position where the traders are tired, or some of the bear traders have finally woken up, and that have been waiting for the opportunity or waiting for the moment for them to be able to get into the market. That doesn't necessarily mean, though, that the Bulls were sad, because they were already on a huge run since July, or even in March if they were already trading during the March time. But ever since July, the uptrend for the US dollar has been strong. It's only been for the past couple of weeks or past few weeks that the market has seen the slowdown in the projection or in the ideas of the market for the US dollar, that they see it slowly moving downwards. So going back to the original plan, so let's look at it from a longer scale. You will see that after moving up, the market for the USD JPY has been on a downtrend for since it broke the levels of 151, which is, for those who are unaware, is a record high. Actually, if you guys have been following us for the past few months, we've discussed just during the fundamental information, or during the fundamental analysis, where we say that after a certain point that central banks may decide to move into the market, and we were expecting Japan to come in during when it was reaching the 150 levels. But the market just was stronger in comparison to what Japan was. Actually, there's no actual information if Japan actually did try to help out the yen with regards to the strength of their currency, but there was an insinuation from the president of the Bank of Japan, which was, I believe it was Suzuki. I believe it's Suzuki. Yeah. So, right. And before that, let's go back to what's gonna be happening this week. But before then, I want to officially welcome everyone. Thank you for joining us today. This is Noah from Trading Star. I hope everyone's already having a good week. There's a lot of movement in the market. Our expectation for the rest of the month will be a slow taper down for the volume and the movement of the market. It usually happens like this during the December season, where traders slowly take a back from the usual trading routines and try to spend the money that we made during the 11 months prior for the market. So for those guys who are celebrating with us, congratulations. And for those guys who are still new in the market, feel free to create an account, open an account with whichever broker that you trust, If you want our recommendation, feel free to message us with our what they call this, with our information during the latter part of the show. So that's for our end, and hopefully some of the information that we are sharing with you guys are sticking and helping you guys out for the upcoming for the year, for the next year. We're already preparing for the next year. I know it's still the first week of December and there's still money to be made, but hopefully the profits that you made during the January to November season is more than enough already that you can take the December, which is not exactly the most profitable season to make money, but there's still opportunities. So that's what we'll be discussing today. Opportunities, or how do you trade, or are you gonna adjust your strategies with regards to movement in the market during a low volume season? And like I said earlier as well, that low volume, you can apply this not just in the holiday season, but you can apply this in any situation where when you trade and then there's a lower volume of traders, or there's a low volume of money where you do not want to where you do not want to get into the market. So some of the strategies that you might want to consider, because again, we understand that not everything that we say is applicable to everyone, but if you can at least apply something out of whatever of all the information we're trying to give you guys, we believe that you'll be able to improve yourself as a trader in the long run. As they always say, 1%, just get 1% better every single day and you'll be fine. So, looking forward, what are the opportunities happening in the market this week? It's always, whenever you start the week out, or whenever you plan by the end of the week, always look at what information will be coming out for the data. True. Let's bring back all. Let's just remove the non-essential ones. Here are the most essential. Let's include the medium ones. There. Here are some of the essential information, or some of the essential fundamental data that you should be checking out for the coming week. Yesterday there was information with the CPI of the franc, and ECB president spoke yesterday. Today, Japan just released their core CPI year-in-year change, which apparently is a negative. So if we check out what's happening with USD JPY, you would see that that's the movement right there. Okay, there's gonna be some information with. So today, Australian dollar will show their cash rate. Expect it's already cash rate for Australian dollar has been maintained. If you'd actually check the Australian dollar has not had major movements. That's why I'm focusing on the USD JPY. Major movements has been USD JPY and Euro USD. If you want my recommendation for this coming week. So later, there's gonna be some ISM, PMI, and JOLTS job opening for the US dollar. Tomorrow, for those who trading in Australian, GDP report for tomorrow, quarter and quarter, nothing major. GBP pound, the cable has a construction PMI showing up tomorrow. There's an improvement there as a forecast. So let's see what happens with the with the pound. US, okay, again, for those who are familiar or have been following us for the past few weeks, our favorite day of a month, the first Friday, where the non-farm payroll is showing up. There's gonna be expectation this coming Friday, but for the ADP, the automated version, or the smaller version, or the prediction model is showing a 13,000 improvement for the non-farm payroll. And then Canadian dollar will have their BOC rate statement, some overnight rates, and some IBPMI. For the last 2 days of the week, Swiss francs will report their currency reserves, and some unemployment claims from the US usually coincides with the non-farm payroll. And Friday is, hopefully everybody's gonna be prepared by Friday using all of the things that we shared. There's gonna be new loans for Chinese yuan. There's gonna be that's a huge improvement, or a huge increase in loans for the Chinese yuan. But the star of the day for Friday will be the US dollar, where they'll be discussing their average hourly earnings, the non-farm employment change, and unemployment rate. So these two, I'm not expecting huge movements, because the non-farm report will probably overpower any other information that the others will show. So prediction, the previous of 150, and then there's going to be a prediction forecast of 179,000 for non-farm employment change this coming Friday. So expectation is for the US dollar to move up, but again, it depends on the situation, or it depends on the actual results that will be coming up. So I hope everyone's already positioned by then for moving into or taking advantage in the market. So that's our recap for what's coming up. As for our main topic for the day, we'll be discussing some of the things that I wouldn't say bother me, but more of how we could take advantage of low volume seasons. Because if you check, let's check it. So if you check the volume for the trading, so slowly you will see that the movement of the market is going to be slowly adjusted. So you might want to double check that. Okay, there was a few glitches. I apologize for the pause. There's a few glitches with what happened over here. All right, let's get back into it. Historically, holiday season usually gives various effects on the Forex market. Some things to consider with regards to trading during the holiday season is, number one, there's definitely some reduced liquidity. So during the holiday season, trading volumes can decrease significantly, as many market participants, most especially institutional traders and major institutions, take time off for holidays. This reduced liquidity could lead to wider bid or ask spreads and increased volatility in the market. Traders should be cautious during this period, and they should adjust their expectation, as price movements may be more erratic. So Like I said, the holiday season is a special season that everyone's having fun or everyone's enjoying more of the fruits of their labor than actually laboring back into the market. So um, please understand that you always have to have uh, your, of course, the risk strategies that we've always been discussing, but as much as you can, try to be aware of the differences in the season. So there are market closures that we are not expecting. Different financial markets around the world may have shortened trading hours or be closed entirely during holidays. So there's going to be less time for the market to move, or sometimes this is the season where, because of the holidays, there's going to be the jumps in the trading or in the pips, wherein you're gonna see some gaps in the market. These are the seasons that you might want to look towards to. This is also a season where there's thinner market conditions. With fewer participants, it becomes easier for larger trades to have more significant impact on currency prices. Thin market conditions can amplify price movements, leading to abrupt and unpredictable changes in exchange rates. So again, since there's going to be less liquidity, it will only require a smaller amount for huge movements in the market. Now, this could be advantageous if you are familiar or if you have a bigger cash or bigger capital when trading in the market. Maybe you can be a mover in the market. Unlike if you are, for most of us, retail traders, we are still just gonna take advantage of are sticking to the fundamentals and the technicals that which have brought us our strategies for the year. So also things to consider. You should also look at your year-end positioning. Traders, investors often engage in year-end positioning, adjusting their portfolios based on their performance throughout the year. This can lead to increased volatility and sudden price swing as market close out position or take profits or losses. Like we discussed a few weeks earlier, if a market shifts to the other end, sometimes it just means that the market is selling out their position or moving away from their position, not necessarily meaning that they're already switching sides. So if you see, that's why when you see movements like this, for example, for the USD JPY, wherein the market is going down but there's a movement of going up, there's a high probability that that means that the market during that time, or the traders who were trading during that time, were able to or wanted to liquidate their positions and cash out from their earnings already. So another thing to consider is there's going to be the central bank activity. As I said with the intro, central banks will be start to close during the middle of the year. There usually there's no operation by the second half of December. So whatever interest rates, whatever rates they decided by the middle of the year, or whatever data that we've gotten during the end of by middle of the month, we will be sticking to that, and that's the data we'll be using to get into by the new year. This one is for those who are enjoying the fruits of their labor, some holiday spending and some economic data with regards to spending. So usually the manufacturers will have a improvement on their margins, or improvement in their sales reports during this month. So expect this. Usually what's the result of the spending in December will carry over to January. So take this as a mean to prepare yourselves with regards to positioning the market that some of the numbers might be inflated. But normally in the CFD market, this doesn't affect the market as much as, for example, in the stock market where you have to check the earnings and the sales of the financial statements of companies. Usually in the forex market, the CFD market, it's not as big of a deal, but sometimes you might want to deep dive into that type of information because uh, it could still mean something in the fundamental side, or more especially in the market sentiment side, which is something that we do not normally discuss. But trust me, it's always at the back of my mind, and hopefully it's always in the back of your mind as well. So any data, any economic data is always good data to have. Whether you use it or not is up to you. And lastly, for the historical movement with the market, there's going to be risk aversion or risk appetite. So holiday season can also influence overall market sentiment. Traders may adopt a risk-off approach, seeking safer assets, or a risk-on approach, favoring higher yielding and riskier investments, depending on the prevailing economic conditions and geopolitical events. So, I have an example right now for this one. So, our company is currently, the market position for the company has been not the best, so the company decided to put it in more and more conservative strategies. So that type of thinking allows for the market, allows, if you extrapolate that kind of thinking in a big enough scale, there's going to be a lot of market moving from higher risk investments to more conservative investments, which is, for example, bonds, uh, or bonds, and then that will move the bond market up. So it could shift the. I know that we're trading in CFD and Forex. Most of the discussion that we're discussing right now is more on the CFD and Forex side. But being aware of what's happening on the other side of the spectrum is also highly recommended for everyone's understanding about trading in the market. So let's do a quick rundown of how the market performs. So let's check USD/JPY. This is let's check the December 1st. There you go. Let's go for the daily. And then let's check for the past 3 years for the USD/JPY. How it performed during December season. So last year it started here and it ended where it ended. So here. So from a trader's point of view, during the December season from last year, you would see that the market moved from 135, it went down to around 133, and then went up again to 138, and then it went down to around 130, shifted up again to 134, and then down to around 130 again. So it shows you that even though there may not be liquidity in the market normally, But if traders decide to trade in the market, there's gonna be huge swings in the market. So uh, this is an example of 2022. Now let's check 2021. So if you guys have questions, feel free to ask. If you guys hope everyone's understanding the ideas that I'm sharing with you guys, and hope you guys learn a few things today. Right, this is 2021 up to, let's move it here. So as you can see, for January, for the year 2021, the movement of the market wasn't that huge. Its lowest was around 112, and it didn't have huge spikes in the movement of the market. It only moved around few pips up and it was been going on a general direction, so which was bullish. So 115. So for the entire month of January, there was December of 2021, there was just a huge movement for the bullish position for the USD JPY market. Does this mean anything? In all honesty, it doesn't. As you know, as the disclaimer always says, past performances do not guarantee future results, which means that even though this is what happened last year, I cannot guarantee you that's going to be the same thing that would happen. What happened 2 years ago would be the same thing that happened this year, or what happened last year was the same thing that would happen this year as well. So, but it's always nice to know, always good to check the current situation of the market, and always see if we are able to take advantage of the market. It's a bit far down from what our current state is. That's fine. All right. Hope everyone understood that part of the information, or that part of the sharing of the targets. Feel free to ask if you have any questions with regards to trading during the holiday season and whatever. Reviewing historical data. So understanding, so seeing that. So if you can check that the past two years, there's two totally different movements in the market. The first year is the 2021 year, where the market is just bullish, and there was just some traders who probably stole some of their positions in the market. That's why there was some slight retrenchment or slight retracement for some of the currency pair. And then when you saw with 22, what happened was the market swung huge one side, and then swung huge on the other, then swung huge again the other side, then swung huge again to the other side, all within the same month of December. So it's both interesting and both also not unnerving, but more of surprising that you could have that type of movement go in the same currency pair in a given month. So if you want to understand more, or you want to be ready with regards to what type of movement the market will happen, you should always have the fundamentals, or always the basics, because you have to understand that in a nutshell, or I guess in a way, it's still the same strategies that you apply, whether the market has volume or not, whether the season is a good season or a high volume season, whether the holiday season or not. Just make sure that the fundamentals when trading in the market is always there, because you never know, because that's what we keep telling everyone. Risk management is of prior concern all of the time, and always be checking for strategies with regards to moving that market that way. All right. So usually December has major economic events. Um, it's mostly related to year-end reports, year-end predictions for the year. Central bank meetings usually finish by the middle of the month. So usually the huge movements in the market are those. Make sure that you are positioned properly, or it's like we said, or like I say in a previous post, it's always better to move away or not put any position at all than be in a losing position. So if you're not certain about any single position, especially during the meetings that will be coming up, just wait. You can always do it next year. Enjoy the spoils of your of your trading this year. But if you are if you really want to do it, just make sure that you understand that uh, just be ready for whatever conditions the market will give you. So next thing I want to discuss is there gonna be liquidity and volatility issues with regards to the current season. Um, Usually, trading volume during these markets can be challenging, uh, especially for retail traders, because the spreads could increase during this time. And if you do not have a huge capital, a few dollars here or there in spreads might eat away at your profits, and you might feel the difference. So something you guys should consider with regards to the spreads. There's also increased slippages and potential difficulty with regards to executing trades. But here are some strategies that you can employ for such a situation, so that you guys are prepared for such instances that the market doesn't help out, or that the market doesn't cooperate with what you want to do. First, um, use limit orders instead of market orders, except of the real-time one. Consider using limit orders. Placing limit orders allows you to specify maximum or minimum price at which you are willing to buy or sell. This can help you avoid unfavorable prices due to wider spreads and low volume conditions. So this might be something that you haven't tried yet. For those veteran traders that have been in the market, I'm sure you already know the value that having limit orders, buying limit and selling limit has for your strategies when positioning the market. This also helps you out that you will never be forced to get into a position that you are not comfortable with. This helps you out in the sense that you have control about when you are getting into the market. Actually, this, I guess, I believe I said it earlier, but if not, let me rephrase, or let me reinforce the idea that some of these strategies, or majority of the strategies that we are sharing with you guys, are still applicable during the normal market season. It's just that these are the parts that we want to emphasize during this season. So, like I said, we have a whole tapestry of ideas, whole tapestry of strategies with regards to trading the market. But depending on the situation of the market, or depending on what's happening in the market, uh, some strategies work better, some strategies work less. This idea works better. You should be focusing on these ideas. So that's why we're sharing with you as much information as we are able to, so that you can use whatever you think or whatever would help you during that time. So let's check. Let's change currency pairs. For example, let's switch to Euro USD. So for the euro against the dollar, it's a huge downtrend. Let's also put in the month. So December starts here, November. Change this to daily. Right, so let me see. Switch back to an hourly chart. So as you can see, for the euro, there's a huge uptrend, but currently they are spiking towards a downtrend against the dollar. So using that idea, we should be preparing for other things with regards to movements in the market. All right. Another strategy that we could share, we want to share with you guys, is probably trading during the peak hours. Identify the peak trading hours for specific pair if you're trading. Forex market generally experience higher volume and liquidity during the overlap of trading sessions, especially the trading session of New York and London. We've discussed this. We've discussed this on previous live streams that we have, that there are three sessions in the market: the Japan session, London session, New York session. And there are timing wherein the sessions overlap. So you want to consider just trading the 3 or 4 hours in a day and just focusing on that time frame. That limits your risk for trading in that day and also maximizes your potential, because the liquidity, that's the best time that the liquidity in the market is high, and the volatility is also high during that overlapping market sessions. Number 3, focus on major currency pairs: the Euro USD, USD JPY, British Pound. They tend to have higher liquidity pairs compared to other pairs. In low volume markets, it's often more prudent to stick to the major pairs to reduce impact of wider spreads and slippage. So the less the volume, the less movements in the market, there's gonna be more potential for wider spreads and slippages in the market. So always be considerate. Always consider that. That's why we always discuss only the major pairs. So mostly the dollar against the yen, euro against USD, Australian dollar. So all of the majors as much as possible. In fact, I can show you this. I'll show you an example of that. So let's just remove the ones that we did. So this is an example of the USD Canadian dollar. Put a mark here. So this is the USD Canadian dollar. Let me show you the USD. JPY. I hope everyone's getting information or getting as much as you can from this session. I know it's not a very technical session, it's more esoteric or ideas, but some of the things that I'm sharing could be helpful. So as you can see, there's in comparison to this is the price movement for the USD JPY in comparison to the USD CAD. So one, as you see, even though they both have the same base, they are moving towards a totally different direction. As of the moment, USD CAD, which is what we're seeing right now, here, is moving upward, the bullish trajectory, while the USD JPY is moving on a downward trend or a downward trajectory. So again, so just because a currency pair has the same base or the same the other side of the scale, it doesn't necessarily mean that they will both be moving in the same direction. It just means that the pair, that's why they always trade in pairs. So it's just one currency against the other, independent of the other currency. But as you know, that's the reason why they start trading in the market or start moving the market or the general direction of the market. So that's information with regards to trading the majors here in the currency or the CFD market. So another thing to consider is being patient and selective with regards to low volume markets specifically. It's crucial to be patient and selective with your trades. Wait for clear signals and avoid chasing the market. Trade only when you have a high level of confidence in a trade setup. So, as we always discuss here, always whenever you are not confident with the trade, don't go into the trade. That's fun. And whenever you go into a trade, make sure that your stop loss is already positioned and your take profit is already in a position. We also hopefully also applying the proper risk reward ratio with regards to your trades. It allows you to maximize your profit, and it also adjusts your win percentages. So normally when your risk reward ratio is 1:1, you just want to win like 51% of the time. But if your risk reward ratio is around 2:1 or 3:1, even if you win less than 50% of the time, you still make money from the trading. So for those who are not applying risk to reward ratio yet, now might be the time to practice it. And when I say practice it, not with your real money, you can always open a demo account. Alright, next one, you want to diversify your time frames. Consider analyzing multiple time frames also to confirm signals and identify trends. Using a combination of shorter and longer time frames can provide more comprehensive view of market conditions and help filter out noise. So hopefully, one of our earlier videos, you guys were able to catch up with regards to time frames and which time frames are the best to apply for what your strategy is. And hopefully by now you are a flexible trader enough that you understand the type of trader that you want to be, or the type of time that you are allowing to allot for trading in the market. This hopefully gives you an idea about changing a bit of strategy. Again, maybe this is the month that you will be experiment with some new strategies. uh, it could be a way for you to improve yourself as a trader. So maybe it's time to adjust, diversifying your time frames and choosing a different one when you wish to do, when you're already comfortable with the other setup. Right, number 6 coincides with the previous ones, which is you should avoid illiquid periods. That's why we suggested trading when the two markets overlap. Be aware of times when illiquidity is known to be especially low, such as holidays, economic events. Avoid trading during these periods or adjusting your strategies accordingly. We are reminding also everyone about our favorite topic that we share with you guys on a weekly basis, and not just me but also my colleagues. You're gonna be, which is your risk management. Right? Implement effective risk management strategies to protect your capital. In low volume markets, unexpected price movements can occur. So use stop loss orders to limit potential losses. I already discussed this. This is probably the 4th time I've discussed this during the entire hour, during the entire session. This is not the first time you're gonna hear it on this session, and this is not gonna be the last time you're gonna hear it for as long as you are listening to us here at Trading Star, because as we always say, managing your risk is a lot better than moving towards potential income. So even if you are making a lot of money, but if your risk management isn't exactly on point, it just tells me that what you're doing is more gambling than actually trading in the market. And as you know, with gambling, you can win big, and you might be winning big, and then I applaud you, congratulations. But you have to also understand that winning big comes with the same balance that you could also lose big, and which it's not something I wish for you guys to experience. So that was huge. I won't say life changing, but it was a huge impact for me as a trader with regards to experiencing trading into the market and then losing a significant amount. Also, you might want to consider to automate the trading. So there are systems in the market for some traders. There are copy trading signals or copy trading platforms. I've never used this personally. So for those who are using platforms that have the copy trader, for the option to use the copy trader movement, if you want to use it, feel free. You might want to consider it. You might find somebody else who's better than you or who has insights on things that you are not familiar with, and they might have a better grasp of how to trade during these seasons. So you might want to copy them out. Another thing that you also consider should be, even though it's the holidays and you're having fun with family, friends, doing a lot of the fun stuff that life is all about, make sure that you keep informed. Reading the news a few minutes every day is always a good thing. Keep abreast of economic events, news releases, and any other factors that could impact the market. Especially sudden news in low volume conditions could have more pronounced or more impact or more movement with regards to trading here during this season. So even though you're out there having fun, make sure that you are updated with what's happening in the global and overall economic situation of the world. And probably the thing that you should consider as a trader is the spread costs. So when I started, this is something that I wouldn't notice before. I always thought that the spread is the spread, but since Since trading for a few times, for a few years now, I've noticed that there are some inconsistencies with regards to spreads, or there's gonna be wider spreads during low volume markets. And uh, for a few trades, it might not matter, but if you are a high volume trader, these the wider spreads add up. So again, keeping a close eye on the spreads. If you're somebody who do not check out the spreads, I suggest you start logging in your information, or logging the data with regards to the spread with whichever broker you are using, and then keeping an eye out with regards to spreads. And also, this might be a good time to try out other strategies or switch strategies to more of a bigger time frame or longer time frame, or a bigger, higher leverage, but only a single trade strategy. This could help you consider with regards to trading in the market. So, um, hope that helps you out with regards to whatever currency or whatever, when it comes to liquidity issues with the market or volatility issues with regards to the market. So that's it. I hope you guys had a fruitful and good session with me today. I hope that you had few ideas that you were able to get from me. Hopefully, you'll be able to implement them. Even if you're not going to implement any of them for this year, I still thank you for joining me here in Trading Star. If you have other questions, feel free to ask, or if you have suggestions, or if you just want to, for those who are trading already in the market and who had some of their great wins, feel free to share them. We'd love to hear from you guys. We'd love to hear your successes. Even though you're gonna come out as bragging, but I understand the feeling that you made a couple of $1,000s in just one trade, and you just have to share it to somebody, and you can't tell it to your friends because you don't want them to hear the fact that you're making a bunch of money, because they're gonna ask you to pay for dinner the next time you meet them. Yes, I do know. So let us be the ones to hear from it from you, that you can brag to us, because we are all will be because we already know the feeling, and we'll just give you your roses or give you your flowers with regard when it comes to your successes in the trading floor and in the trading market. So looking forward to what's gonna be happening the end of the week. Non-farm payroll this Friday, don't forget. And then let's see how everyone's set up for this week, and let's see how everything's set up for next week. So looking forward to that. And thank you, everyone. Have a great week ahead. I'll see you next week.